New 52-week high. Almost hit $15, which is wild to say. When I initially pitched Jumia, I was like, what, $6 maybe back then? I got in at around under $4, but I pitched it around 6 on here a couple months ago. I said it's going to hit $15 by next year. I didn't think it hit.
Oh, dude, you were talking about it. Well, you were talking about it, and then when you brought it to the stream, it's 561.
But see right there, and it's near triple almost now in the matter of months. So why did it catch a bid today? I keep getting asked, like, why is it up 18%? Their earnings date just got announced. They never, ever have their earnings this early in the cycle. Then they just announce in 2 weeks. Ever. They're always towards the end. They have no analyst coverage. They now have Benchmark covering their name. So Benchmark just gave a $14 price target on Jumia a couple weeks ago. First analyst coverage, institutional coverage in over 2 years. So that was more of like, wow, narrative change. It's a real company because we actually have estimates to rely on, not just myself who created my own estimates where I think it's going to grow top line 45% for the next couple of years with 15% EBITDA margins. Like that was my guess. And now they produce 40 Benchmark said they're going to grow 40% next year with I think 12 or 14% EBITDA margins next year. Regardless, they're going to be profitable next year. So this is my thesis of what's happening in Jumia. I think the constant currency issue they've experienced specifically in Nigeria, that's behind them. I think before, like we had to always do a constant currency revenue growth. Like let's just say the currency exchange was normalized. What would the top line growth be? And it was always way higher than what they actually produce. That's behind them now. Now that we wrapped up that previous quarter, like they're going to be aligned, so you don't have to really do that constant currency finessing to the numbers. So I think that's a benefit. I also think we could be aligned with a free cash flow positive quarter. If that's the case, the stock will skyrocket because right now they had a profitable quarter, but it wasn't a free cash flow positive quarter. But now if they show that they can produce free cash flow quarter after quarter incrementally,
that would be ridiculous.
Ridiculous. While growing the top line 50%. But I think that once they prove that they could do that, I think they're going to slam down an equity raise for secondary offering. Like, look, we just proved to you that we could get to this point without doing secondary offering. Now that we did, we're going to raise $200 million in cash, invest in our infrastructure, create a logistic network for our area of Africa that's underserved and underutilized. And then we're going to go ballistic for the next couple of years on growth to maintain that 50% CAGR. Who knows how long, because it's only $1 billion company. It's rare, absolutely rare, that there's a leading e-commerce company in an underserved region like Africa that's worth only $1 billion. But that's the case right now. It's a wild times, but that is the case. And Jumia, the biggest factor on Jumia was solvency risk. Like, can they actually ever produce free cash flow positive quarter? Like, do they constantly have to dilute, and essentially be like a shitco company that has a big presence? That's not the case anymore. Like, they just provide an operating profitable quarter 1 quarter ago. If they do a free cash flow positive quarter, I do think it's going to be going for the races to 20 because on the chart, it looks like it wants to fill 20 instantly.
Yeah,
and now,
it does, dude. So I was just doing the math. You gave it to them. At least people that followed you got it at 293. We predicted on this stream 341% upside to $10.09. That was our target, right? It's boomed that target. So boomtown. But to take a step back at the second targets that we gave them, 21 and change, followed by 27.5. And right now we stay north of 1440. We're absolutely going to 21 because look at this liquidity here, dude. Like you can't ask for something more delicious than this.
And it's a different company too. Like I get everyone's fear, or like you have stitches from being scarred or whatnot when it ballooned to 70 and went straight down to $3. I get that, but it's a brand new, different company, and like I don't want to compare it. It's yes, people reference it as the Amazon of Africa, but it's not going to be the Amazon. But imagine, like when I got in at $3-4, like what was it, $300 million valuation?
10% of the Amazon of Africa. 10%. Exactly. 10% of Amazon that we see, which is
it's
again, guys, digital just changed. It changed everything.
And
again, we've talked about this a billion times.
Mm-hmm.
We just hired a copywriter. He lives in Kenya, extremely competent, smart dude. I'm paying him less. So he charges less than if I went and just grabbed a guy on Upwork in the US. He's probably 75% of that price. So if they're charging $3,000, he's charging just below that. So I'm saving money. He has the same skill set, writing ability, right? But he can command a lower price because his money goes way further when he takes his USD in there, right? And that is happening because, again, he's young. I'm pretty sure he's younger than me, a couple years younger than me. So he's been able to scale up his knowledge base and capability over the years, shit like YouTube and Udemy, all these online courses, right? To take the job as the best man for the job, which is quality versus price, right? That's how you find a good median. And he's the best blend. So here's the thing. Where does he spend his dollars? He's not here. He's not using Amazon. So as their economy grows, which it is, what do you think is going to happen? I think the consumer, like the digitally facing consumer products, businesses in those regions are going to boom. So I think that their consumer spending dollars are going to be from zero, nothing, to, even if they grow by 50%, it was zero and now it's X. You know what I'm saying? So from there, it's just a stepping stone. We're going to build this base of these companies. Like, it's interesting that this is the emerging markets opportunity that has basically come onto the scene, was everyone's looking at China over the last couple of years. Like, they're beaten down, valuations are terrible. That's where the emerging markets are. And even India, right? Which I would argue India still has a pretty competitive landscape, and they could take over a significant portion of like the new digital blue collar labor that exists, right? The click farms and the marketers and all that other shit. I think that they'll take a pretty significant market share, right? But nobody's looking here. And I feel like they should have been. It's like India, China, that was the head fake. This is where it's happening.
No, 100%. And we're also not factoring in Starlink. Starlink is getting launched in Africa recently. And that's like, it changes it completely. And you're also not factoring in, like, Jumia has a fintech component. They have Jumia Pay. Like, a lot of people don't know, like, they have a fintech component. So, like, again, consumers start getting more money and they start having more, like, Starlink's going to help the accessibility of this underserved markets and area. They already have a fintech component to it where I want to say very close to 100% of the orders are completed using Jumia Pay. Okay. Guess what's also going to happen? They have a UPS partnership that got announced 2 years ago. Everyone forgot about. The way they so Jumia also employs like locals, citizens to numerous non-urban areas to like essentially bring the internet directly to people's homes through JForce, and then they deliver the packages by hand. Amazon can't do that. Alibaba can't do that. Only an in-house like e-commerce presence like Jumia can have that luxury of doing that, knowing the ins and out of the whole region, being infused within the citizens. Like, if you talk to people like in that region, they treat Jumia as like the Metas, the Googles that we do here. Like, it's that kind of presence in Africa. It's just totally underserved and underutilized. But that's going to change due to Starlink and the consumers improving in that region. That's going to instantly benefit Jumia via Jumia Pay. That's going to be used to buy consumer goods products on their platforms. Like, I think the story is so early ending of this. If they can actually produce 40+% CAGR next couple years while just hitting free cash flow positive, like, that's a complete re-rating on a $1 billion company. And this could easily be a $5 billion company like that. And if that's the case, it's close to $100 stock. That's the crazy thing about runners like this. And if you invest at the right time at an inflection point, I found Transmedics at $40 because that Summit Aviation company they acquired is like, wow, this is a game changer for Transmedics. They own the whole end-to-end network of organ transplant delivery system. Now they acquire these the jet company, aviation company. They own the whole logistics. That's a massive moat that the competitors can't duplicate. Jumia has the similar traits. I was always worried about their solvency risk, but that's diminishing. Especially, I really do think they're gonna have that home run or earnings report and produce that free cash flow positive quarter. They prove they can do it, then slap the $200 million secondary offering, which I do think will make the rare occasions. I do think that will make the stock go up because it's going to be at the market, in my opinion. It's going to make the stock go up, and solvency risk is out the door. All of a sudden, they have $200+ million in the bank. They produce free cash flow positive quarter every single quarter. They can invest in infrastructure. Like everything is aligning up for a name of Jumia. So it's just like one of those rare opportunities, like Transmedics, Jumia's one. Like those are two massive winners. I think they're both still small caps. Well, I see a path towards becoming a $15+ billion company.